This was an interesting article that was off of Miles Franklin Precious Metals Investments, and goes over to the Sprott premium mainly, but also several of the premiums of funds that are in Canada. And I don't know if you know about this, but PSOV has had a very high premium actually in December. Premium surges to 31%. So it's the highest it's ever been. And this guy, he's been into the physical metals for quite some time, but he also invests into the bullion, where the people are actually holding a physical bullion, as in the type of funds that Sprott has. But an older fund around that was the Central Fund of Canada, ticker CEF. He's owned it since 2003. It says it's not bad as an alternative to physical gold and silver. If you don't want to hold physical gold and silver, then these are the type of funds to hold. And I do have the PSLV from Sprott myself. Not mainly, though. Mainly in the physical. He talks that Central Fund of Canada is roughly half gold, half silver, has a $5 billion market cap, and has been trading since the 1960s. The fund's founder, Philip Spicer, is still the chairman, and the CEO is the son, Stefan. He's got 100%. He says he has 100% faith in Stefan running the Central Fund of Canada, which holds all its metal in audited level 10 vaults in various Canadian cities, as well as the newer sister funds, Central Gold Trust, GTU, and Silver Bullion Trust, SVRZF. Now, personally, I would go with the Sprott funds. I think they're about the best as far as, as far as an alternative to physical. And I definitely would recommend that you actually get the physical coins first before you even mess with investing in paper silver. Sprott actually does have the physical silver, so I would trust that is one of the better funds to hold electronically. In recent years, maverick and Canadian investor Eric Sprott launched his own bullion-only closed-end funds. The Sprott Physical Gold Trust, ticker PHYS, and Sprott Physical Silver Trust, ticker PSLV. These funds are identical to the Spicer funds in all ways, except one very important difference: the ability to redeem your shares for physical gold and silver. Now, there's a catch to that. The minimum redemption amount is roughly 10,000 ounces of silver. So you just can't go walk in there with, $10,000 worth of PSLV and state, or whatever, $10 or $20,000 or whatever, PSLV and state, I want my coins. You're not going to do that. You need 10,000 ounces of silver equivalent, and you're not going to get coins. You're going to get London Good Delivery bars, which are those 1,000-ounce bars that aren't worth anything for actually getting money for, unless you're going to some specialized circumstance. And it's not the way to hold silver. 1,000-ounce bars is definitely not the way to hold silver. But supposedly this is still a good deal because he does have the silver there. He does have the silver. This guy, he says he's been acquainted with Eric Sprott for some time via the GATA organization, the Gold Antitrust, as well as a longtime partner, John Embry, the most famous PM investors in Canada. These two men are highly principled and dedicated to preserving shareholder equity as the Spicers. Same thing. He says he has 100% faith in these funds as well. But I would also, like to repeat, he knew when to sell. And actually, if I was a little bit paying more attention, there was some articles out on the net back in mid-September that indicated that insiders were selling the PSLV. And I didn't see them at the time. I saw them after the fact. Wish I saw that, because that's a big difference going from about $40 spot to $30 spot. And you buy it back, right? That's the way I would look at it. You buy it back cheaper. But you never see this kind of information on YouTube. What you usually see is buy physical silver. We got them on the run, right? Yeah, right. You know what? I'd rather know when to buy, when to sell. And you need to do that mainly with the electronic funds. But Sprott obviously knows when to sell because he's out of his own fund, and I find that pretty interesting, despite what all this rhetoric. But I would trust him more than I would trust a lot of other people. That I have to say. But if I get any kind of word that silver goes up to $60, $65 an ounce, I'm probably dumping a PSLV at that time because I expect it to be quite a bit higher and have a bigger premium. This guy who wrote this article, for nearly a decade, he's followed in real time the premium discount of these funds to their underlying net asset value. Net asset value is the market value of the fund's gold and or silver divided by the number of shares. And these funds have traded at premiums to net asset value for nearly the entire decades-long precious metals bull run. And he's seen them dip slightly below net asset value for brief periods, such as the bottom of the global meltdown in late 2008, but never for long and never for more than 1 or 2%. So normally it's been trading a good premium. Conversely, the premiums have ranged from normally they range from the low single digits to the mid 20s. And if you look at this chart here, this is an average the number of days that the premiums have traded in percentage. The premium is over the net asset value. So normally it's about 12% to 21% running that much of a premium on a PSLV. Now it was recently as high as 31%. I don't know what it is with this drop that happened on a Friday the 13th, but still, it's still probably well in the 20s someplace. It's probably still way up here, 24, 25% running that much premium. So what I think is when silver really takes off, you're probably going to see even a higher premium on the Sprott front. So it's working like a slight amount of leverage, slight amount. So I'd recommend that's pretty decent way to make some money because I do think silver is going to double this year, no problem. And conversely, he's talking about premiums have ranged from the low single digits to the mid 20s, and they've always stayed positive as opposed to GLD and SLV. These are supposed to track approximately the spot prices, and I had GLD for a while too. I mean, I made money on it and I got rid of it. I had double leverage gold. I had made money on it, then I got rid of it. I never had SLV. I had AGQ. I made good money on that and I got rid of it. So I mean, I don't really want to say that these things are so bad, and it depends on when you get in here. I mean, but I've actually made money on these electronic funds, so I mean, I don't think they're that bad. And even the stocks, I mean, they're not doing nothing right now, and I know Sprott's all pissed off about that. So he's saying, like, hold back the inventory. I want the price of my stocks to go up. Well, good, go ahead, because I don't have too much of that stocks, though, but I have some. And if they go up a lot, good. They'll probably go up more than double. I mean, if the silver, they already doubled, and I sold some of them, that they were even higher than they are now. And I expect, if silver does double, the stocks will probably do triple or quadruple. So then I'll get rid of them, because I don't think I'd really want to have any kind of money in any kind of financial institution. I'm being a wonder about this stuff myself. And this is a little chart of the 5 funds up in Canada holding physical silver and gold. And Sprott's PSLV is trading at the highest premium, 31%. So he's also saying that that's a big indication that there's a major physical shortage out there of the real metals. And the recent surge in PSLV's net asset value premium to 31% is extremely remarkable. It says even as the cartel's post-D-Day suppressions lowered the premiums of these funds, PSLV premium has stubbornly remained above 10%, averaging 15-18% during the second half of 2011. He's talking about when he slammed down the silver prices. They're talking about D-Day suppressions, which was, May 1st around that time, and September 28th. So when PSLV officially became a year old in October 2011, because I think it was started in late, I believe it was October 28th, 2010, it issued a blanket shelf registration for $1.5 billion, an additional $1.5 billion worth of silver to be added to the fund, an enormous amount that theoretically represents 5% of all the above ground silver available on the whole planet. Now, I don't know if he's going to do this or if this is just some kind of, let me put it this way, scam by him to make, I don't know what it would do. I don't know what it's going to do. I can't see him getting that much more silver, but maybe, maybe not. But it was interesting how some of the investors thought of this, because they thought that if Sprott was going to buy $1.5 billion worth of silver, they would be selling it to him. He'd have to buy it up cheaper, not at a premium. So I was kind of wondering about that. That was kind of different. I was almost thinking that it would drive the prices up immediately, but they were saying it was actually going to have an opposite effect. So, investors were worried that the deal would be priced at a significant discount to the market price. I was almost thinking the opposite, because the market in silver is so tight. Now, I think in a plentiful market it would be discounted to the market price. But I was surprised that most investors thought that the opposite. That's not exactly what I would have thought. Quite surprised by that. He says every deal completed by the Spicers and Sprotts have been at premiums to the fund's respective net asset values. So he's actually paying more. So that's what goes on. I mean, so I don't think he's asking to be able to add $1.5 billion worth of silver to the fund. I don't know what the deal is over there. I don't know what he's playing with that stuff. But as a fund that's electronic, I would trust the PSLV over anything. But looking back, what happened here last Friday, PSLV took a pretty good dive, and I think that was partly on the news of what happened with the European debt downgrades, and a lot of it actually occurred in the last 10 minutes of trading. So you might see a serious bounce on this tomorrow, Tuesday, when the markets open up. It might actually bounce up quite a bit. You might see silver spot price maybe jump up 1%, like it jumped up about not less than 1% today. You might see this spring right back to where it was. And I don't, it could possibly be because it actually was trading at the highest premium it ever has, the 31% to net asset value. So conversely, SOV didn't do much, but you notice SOV is actually trading below the spot price of silver, and it's supposed to trade at the spot price of silver. So I don't know what's going on with that. I don't trust this fund at all, and it's the one I got, but I'm going to dump it. Like I said, if I see silver more than double this year, this fund is gone, and I'm taking 100% cash. That's what I'm going to do. He says the problem with silver is that is precisely due to the aforementioned tightness of the physical supply. It's difficult to gauge whether an offering of such size could be executed at all. In other words, how the heck, that's what I keep thinking. I don't know how he's going to buy $1.5 billion worth of silver. I don't get that. I think that's just some news that influenced something. I don't know what he's playing there. I don't think that's actually going to happen. When he actually started the PSLV, it took more than 2 months to take delivery, including a significant amount that was manufactured after PSLV had purchased it, or mined after PSLV had purchased it. In other words, 575 million of physical silver didn't exist back then, and given that the silver prices are roughly the same then as they are today, with demand significantly greater, because the 2011 Eagles are going up. Well, all the Eagles are a record demand, and I don't see how he's going to do this. I really don't think it's going to happen. And I think he's playing some kind of game with this, with this proposal to buy $1.5 billion worth of silver. I don't know what he's playing there, but I know what I'm doing. Like I said, if spot price goes up double and I see his fund have like a 60% premium, it's gone. It's gone. I'm taking the cash because I don't think the dollar's going down to zero. It's going to go down pretty hard, but not to zero. It's still going to be buying stuff. And he says from his standpoint, a 31% premium on the Sprott fund, the PSLV, screams physical silver tightness. And despite the current precious metal apathy, courtesy of the aftershock from precious metal annihilation 2, in other words, when they dropped the price down when the euro, well, actually that was all toward the euro and everything like that. He says he only believes it's a matter of time before the silver market stair steps higher in response to obvious warning flag. Now, I think that's going to happen because everybody that starts deciding they don't feel safe in the markets, they don't feel safe in their bank accounts, they're probably going to buy physical silver over gold because gold is getting to be like, one coin's like $1,700. A lot of people don't want to put that. The average person doesn't want to put out $1,700 for a gold coin because they're not sure about what to do with the precious metals. They're not sure 110%. But a lot of people will just put out, I don't know, $100 for a few coins or whatever it is. A lot of people will do that. So that's going to start trickling in. But once you have a few million people doing that more often, you're going to see so much silver drop off the market that the prices are going to start going ridiculous. And then people are going to start jumping in saying, well, oh God, the price is going up, I should buy more. And it's going to be just like the housing market. It's going to start taking a life of its own. And I do think this stuff is going to go up super high, but I don't trust. I think probably the Sprott fund might go up super high, but I'm not going to hold it long term. I don't trust it. I don't trust any markets at all. I'll take the cash and I'll keep the actual physical toilet paper cash versus keeping money and that stuff. I don't trust it at all. But this is kind of an interesting article because I do find that interesting that Sprott's PSLV is running that much of a premium. I kind of pointed that out on an earlier video without actually going into the premium percentage, that the Sprott Physical Trust Fund did not take as much of a hit over 2011 as the SLV did. And when its silver does go up double or more this year, this fund is going to be much higher, and it's going to go up more than double. I don't know what it would do, but it's going to have a higher premium than this 31%. And the SLV, if it's still around, if it, it's going to have it probably be trading further below the spot price of silver, if it's still around. I wouldn't be surprised if there's going to be some kind of problem with that fund because I think the word is getting out more and more. But what silver do they actually hold? And it's just purely a paper game. So, just looking at this article, I thought it was pretty interesting, and I know it's coming from like the silver crowd, the bullion crowd, but still, I think it contains a number of facts, and looks like we're going to see some more premium in the PSLV. So far as an electronic fund, it's not a bad fund.